Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite in Times Square, we have Mike Sokol. He's the Senior Managing Director on Nasdaq's Market Intelligence Desk. We're here for your midday market update. Healthcare stocks getting trounced. Before we get into that, let's have a quick check-in on earnings. Mike, it's great to have you with me.
Great.
As always, we're just about a week into the earnings season.
Yeah.
What are some of the trends that you're seeing?
Yeah, so I thought I'd just back up a little bit and talk about the trends that we've seen over the last couple of weeks, and that is that earnings estimates are coming down for the first quarter. Right now, we're at a minus 4.3% all in for the S&P 500 companies. Those have been coming down each week since December. Second quarter, as of Friday, ticked into negative territory, minus 0.4%. So your first and second quarter seem like a wash for earnings. And the question is, how come stocks have been able to outperform during this time? A big part of the reason is the Fed and their change in posture. But another part is, and that's what the chart refers to here, the fact that revenues are still looking pretty decent. First quarter looking about 4.8% growth. It depends on the sector that you're in, so this is the breakdown here by sector. But even going out 3 or 4 more quarters out, you're looking at least 4%. So you can be a little bit more patient if you don't have a big macro problem and you get through the earnings problems that we're having.
Right, and if you have all those down earnings revisions, I mean, if you can go up from there, if guidance is a little bit better, if the economy continues to expand, so that could be a longer term potential bullish factor if we get those upward revisions.
Totally, the bar is very low. So any kind of upside surprises, you saw it a little bit with JP Morgan, anything that hints of good earnings can help stocks.
All right, let's talk about healthcare. It has been a pretty painful week for the healthcare sector, and a lot of that is Medicare for all. That's really becoming the mantra right now. So I think the question is this primary political posturing or something fundamentally happened to the pharmaceutical and PBMs?
I think from my standpoint, the way I look at it is, analysts want to model cash flows and revenues and earnings, and that's pretty easy to do. Testing the political wins is that much harder. And so when you're trying to discount in Medicare for all and what that would mean for all the business models of some of these hospitals and managed care companies, it's very difficult. So that uncertainty, you need a much wider berth in what your downside might be. So, and the momentum can take over a little bit too. So I think you have a little bit of both, and that makes it very difficult for the sector. This is the managed care group, hospitals and nursing homes, things like that. But even biotech over the last 7 out of the 8 days has been weaker too.
Because even if we take a look at the chart fundamentals aside, it does not look strong technically.
No, well below the key moving averages, and you can just see when you have wide gaps like that, vertically straight down, it's very difficult for anybody to want to catch a falling knife. And most people, although they want to be bargain hunters, are usually going to wait till there's a bottom in and try to buy it on the way up, then try to pick what the exact bottom's going to be.
Right, because it doesn't look exactly as if there's a buying opportunity at this point either. There just hasn't been any sort of consolidation or a trend or a potential trend to get a reversal there.
I think the buyers canceled and get out of the way.
All right, Mike, thank you so much as always for joining me at MarketSite. And thank you for joining me for Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.